banks. Generally, all the banks in India are showing better performance and felt as more reliable by the common man as well as investors. So that the banks, of course, recently banks' creditworthiness might have been affected for some time due to increasing non-performing asset, but now under present circumstances, banks are showing the better results, better profitability, and showing the stability in their performance and showing improved profitability. Now, the banks are allowed, or banks are advised to raise their capital from market. The central government may not be willing to invest further funds in banking sector, and it will permit and it will allow the banks to raise money required through capital market. The public sector banks has to strengthen their balance sheets by raising the capital from the market, because generally the banks perform with main source of funds is deposits received from the common man and many organizations, companies like that, and those money will be used for lending to many sectors. To strengthen the bank's balance sheets, the banks are advised to increase their capital by raising capital from the market. The enhanced capital would help banks to expand their business and push the credit growth, push the credit growth further to help the productive sectors. Until now, many of the banks have shown interest to lend to trading activities, spending activities, underproductive activities. With this, the central government has advised the way the banks to raise the capital from the market and lend for productive sector, which creates wealth, which creates employment, which generates employment, which adds value to the economic development, and it should be for the furtherance of economic development in the long run. So the banks are advised to raise the money through capital to strengthen its balance sheet and also to help to support the productive sector, so that the productive sector will be strengthened and it will be in a position to meet its working capital. Many of the units in productive sector, manufacturing sector are suffering from shortage of working capital. This working capital is tied up in stocks and receivables, and if these two assets are financed to help the manufacturing sector, definitely the manufacturing sector will survive and also improve its productivity, profitability, and continue to generate new employment opportunities and also wealth creation, and that will add value to the economic development. Also, the banks are advised to initiate proactive measures to strengthen their lending capacity by raising capital. It is advised, instead of going for deposits, the banks are advised to go for capital, so that the capital will be with the bank only. It need not be repaid on demand. Whereas in the case of deposits, the deposit has to be repaid as per schedule on maturity, or even earlier to that also, according to the needs of the depositor. But in the case of capital, the banks need not repay the capital, and that will be with the bank permanently. That can be used for pushing further the credit to the market and to help to improve the credit by lending capacity and to increase the lending capacity by raising the capital from the market. Banks are also further advised to strengthen their balance sheets and raise capital from the markets. Capital is the source to strengthen the balance sheets of every commercial organization, especially banks. At present, the bank's capital is less, deposits are more, and to at least to improve their capital, to improve the capital base, the banks are advised to improve their capital base, and to, of course, the banks cannot discourage the deposits or saving habit of individuals or commercial organizations or societies, companies, but the capital portion should also increase simultaneously with the increase in deposits received by the banks. Also, the Reserve Bank advised the larger banks to share their best practices to small lenders and guide them in areas where they need more expertise. Small bankers, small financial institutions may not have sufficient knowledge or expertise in lending or carrying on activities, and the banks are advised by the Reserve Bank to share their expertise with the small institutions, improve their performance. Also, the banks are advised to explore strategies for long-term profitability and more customer-centric approach. All the banks having a common object of customer service. Customer satisfaction is the most important. Once the customer is satisfied, he will become a depositor. Also, he may become a borrower also. So, this gives the stability to the banking institution, and also it will ensure more profitability of the banks, and also profitable bank can attract more and more capital from investors to capital market. This is one of the opportunity. These are some of the advices made available, or suggestions given to the banking sector, given to the public sector banks by their regulator, Reserve Bank of India.